in the city of Lagos. It's a wonderful time to welcome you once again to Market Insight on SouqNews Television. I am David Chiedu. Look around you, you see that Nigerians are concerned about the obvious at this very point in time. We're talking about prices of fuel, and that's been the rave of the moment since the beginning of the week. So we're talking about the impact on the Nigerian economy and Nigerian households today on Market Insight. As usual, on Market Insight, we talk about how it does affect your pocket, the naira and kobo of it all. Goods, services, commodities, you name it. Here's where you find all the answers you need in a granular form. Stay very close to your TV set to go straight to the conversation, but not before we take a look at trading activities on the floor of the NGX after the break. Join us. Welcome back to Market Insight this morning. Now we go straight to what happened during the course of the week on the floor of the Nigerian Stock Exchange, with us covering trading activities from Monday to Thursday. That is yesterday, October 10, 2024. Now, at the end of yesterday's trading session on the Nigerian Stock Exchange, NGX, a total of 277,745,152 shares in 7,091 deals, corresponding to a market value of 4,653,186,650 naira, 11 kobo, were traded. Compared with the previous NGX trading day, talking about Wednesday, October 9, Thursday's data showed a 22% decline in volume, 33% decline in turnover, and 17% decline in deals. The current market capitalization of the Nigerian Stock Exchange is 56 trillion naira. In the aggregate, 122 NGX-listed equities participated in trading, ending with 23 gainers and 22 losers. Regency Alliance Insurance led the gainers with 10% share price appreciation, closing at 0.66 kobo per share, closing at 66 kobo per share, followed by Caverton Offshore Support Group that went up 9.73%, Royal Exchange going up 8.7%, and Associated Bus Company going up 8.2%. On the losing side, Dar Communications came out last with an end-of-day price depreciation of 10% at 63 kobo per share, followed by Livestock Feed going down 9.88%, Fitsin Healthcare going down 9.71%, and Sunu Assurances Nigeria going down 9.71%. Fidelity Bank recorded the highest volume of 43.3 million traded shares, followed by United Bank for Africa at 30.7 million shares, Zenith Bank at 25.6 million shares, and Lasako Assurance at 22.1 million shares. Now to the conversation proper. We're talking about the impact of the fuel price hike, the second in a month, on Nigerians and the Nigerian economy. So we woke up to fuel price hike increase. I did so earlier this week as the NNPC raised the price to 1,030 naira in Abuja and 998 naira. That's approximately 1,000 naira here in Lagos. Other locations witnessed similar price hikes, with millions of Nigerians lamenting that they have been pushed deeper into difficulties in what signals the full deregulation of the downstream sector, which has been a long time coming. Now, this marks the second price increase by the NNPCL in less than 2 months, and this latest hike follows the NNPCL's withdrawal as an intermediary, or if you like, the off-taker in the Dangote refinery purchase deal, raising more concerns about potential future price increases. Now, where do we go from here? That is the question on the minds of very many Nigerians. We'll discuss this and more on Market Insight this morning as we're joined by two gentlemen We're joined first by Owi Lakemfa. He is a human rights activist, a journalist, and an author, former Secretary General of African Workers. Mr. Lakemfa, good morning. Thank you for joining us. Can you hear me?
Morning.
And also joining us is a professor of the Department of Economics, University of Lagos, a development, monetary, and international economics expert, talking about Professor Emmanuel Dele Balogun. Good morning, Professor. Thank you for joining us. Can you hear me?
Yes, good morning, and thank you for inviting me.
Right, I'm going to start with you, Mr. Lakemfa, to get your thoughts on all that's been happening during the course of the week and where Nigerians are at the moment. And the question they are asking, which obviously is what is in it for them? What's going to happen to them? How are they going to get by on a day-to-day basis? Let's get your thoughts, Mr. Owi.
Well, the interest is tough, and Nigerians are, of course, very unhappy. We are quite hungry, and we know an increase in the price of PMS or fuel will automatically lead to increases in the prices of foodstuffs and other commodities. So we'll push more people into the unemployment market. And unfortunately, also, our industries cannot cope because, there's no way you can plan as an employer or as an industrialist. If prices change overnight, before you wake up, another fuel price increase. And for those who say this is deregulation, I think it's an insult. There's nothing you are deregulating in there. This is pure monopoly, state monopoly, NNPC, handing over to an individual monopolist, Dangote. And unfortunately, as individual Nigerians, we cannot import our own fuel. Although we can refine our own fuel even as individuals, as is done with the Niger Delta, but they say this is illegal. And so we are caught in a trap. We are being used and dumped. And I must say that, you see, this thing that is called democracy has to provide dividends for the people. Otherwise, the people who are hungry will be unable to defend it. So what we are doing, that we are not just endangering ourselves, we are also endangering democracy, and we are endangering the very security of this country. We must start putting on our thinking cap. The problem we have in Nigeria is about vision and a government that has a mission and can carry out the dictates of the Constitution, which says that the essence why we have government is for the welfare of the people and their security. Security is already impaired, and the welfare every day is being challenged or damaged. All this because we do not refine a single drop of fuel. We have 4 refineries. They have made sure for 30 years they don't work. We can build new refineries. A new refinery, if you Google it, can be built within 15, 18 months. I don't need more than $5 billion. It can be built, but we refuse to build it. And so we push our people deeper into poverty, and the people who are hungry will, of course, be very angry. So we need to save our country, we need to save ourselves, we need to save the government, we need to save democracy, and the way we can save democracy and government and our people and ourselves is by ensuring that the welfare of the people is given some priority. All these preachments
Mr. Lakemfa, if you can hear me, I wanted to ask, if you can pardon my interrupting your thoughts for a second, I wanted to ask you, you've asserted that what is going on is, in your words, an insult and not full deregulation as is being, indicated as you were. And then you also asserted that it's a monopoly, as it were. And I'm going to ask you now that isn't that a unidirectional way of looking at things? Because this gentleman made an investment, $20 billion, to see that Nigerians get a new lease of life, for want of a better term, as he were, because we have refineries over the years that have been moribund with promises of, them coming on stream year after year after year, and it's all falling through even till this very moment. The last was a couple of weeks ago, and the NNPCL aren't particularly saying more with regards to that, as it were. So, again, as I ask, you say that this is an attempt at monopoly. Some would look at that as a unidirectional way of thinking. What can you elaborate on that?
You see, capitalism is the practice. It's some competition. So when you create a monopoly, then you are destroying the very essence of capitalism itself all over the world. And in places like US, those who practice monopoly are like to go to, before the court. So we are pushed into a position where you had an incompetent state monopoly now giving way for, an individual monopoly. Look, Dangote is not refining well because he loves Nigerians. Dangote is a businessman. And what we need to do is protect the Nigerians, not the monopoly. All these long stories about he spent 20 billion. How do you know that? The NNPC told us that we have some percentage shares in Dangote. Do you know? What percentage shares do we have? How much did you give Dangote? What are the concessions we gave Dangote? Who says we must buy from Dangote? Why can we not refine our petroleum products? Why? Like I said, in Niger Delta, petroleum products are refined. Then you send young naval men to go and destroy them. There are two things the government has always argued why they have to destroy those refineries. The first thing is that they claim that the crude is stolen. So why don't you put these people into cooperatives and give them, crude? The second thing is about environment, that is not environmentally friendly. Who said God created us with refineries? They were, of course, over the years modified. And so what we just need to do is maybe you get some people in OND1, OND2, to study the process and make it environmentally friendly. Simple. But you don't do that. You are incapable of importing fuel. You are incapable of distributing fuel. And after all these years, you then push us to a monopoly. And you say, if the man has a right to get it. Is the man a preacher? Is he a missionary on some journey to win souls? Dangote is pure and simple, simply a businessman investing. It's not my business. How much you have put there? No. My business is to ask the government that it has a duty to me as a citizen and to everybody as citizens for us to be able to buy fuel at affordable rates, and the fuel must be available. That is the essence of government. That is what the Constitution says. So for us to start preaching about,
okay. All right.
Yeah.
Thank you. Thank you very much, Ms. Alakemfa. We do have a bit of a concern with your audio, by the way. I don't know if you could help us do something about it, because we struggle to hear you from this end. But away from that, let's go on to Professor Balogun. Now, Professor, can you hear me?
Hear you clearly.
Great. Now, Professor, let's do a thorough assessment, of the economic impact of all that's going on, especially on pricing of, food, goods, services, commodities, as you were. Now, we know that energy cost or fuel cost, as you were, is a primary driver of headline inflation. So, in your view, as an expert, what do you see being the implication of this on Nigerian households generally, first of all, before we move on?
Okay, thank you. The price, the increase in petrol pump prices in Nigeria has had significant impacts on the population. Here are some key points. In the first place, it has produced economic hardship. Okay, we are an economy that is predominantly based on fixed wage income, and if your income is fixed, and even the national wage had remained very low over a long period of time, of course, increasing the price of petrol means that the purchasing power of your wage income is lower. The second impact that you feel there is that it results in higher transportation costs, as my colleague had just discussed, due to increased fuel prices, which is likely to result or add higher prices for goods and services, further straining the household budget. On businesses, small and medium-scale size businesses are expected to be severely impacted by the increase in petrol prices, the higher costs of transportation and production could lead to reduced profitability and potential layoffs. Of course, as an economy that is small-scale driven, we already have incidents of higher unemployment as a result of labor layoff. We also have public outcry, and then government policies itself. Okay, the Nigerian National Petroleum Company has attributed the price increase to the removal of fuel subsidies and the need to align with market forces. This is debatable. I have often argued because it depends on the context in which you define the subsidy itself. Critics argue that the economy is not yet ready for full deregulation, and that the decision will worsen the cost of living. And that's the reality we live with today. That's the reality we live with today. My thoughts, yes, my thoughts on this is that it's a tough spot. For many Nigerians, the rising petrol prices are more than just an economic inconvenience. They spell real hardship. It's disappointing to see inflation go up without wages keeping pace, and small businesses suffering from higher costs. In my view, the government needs to find a balance. That is, phasing out subsidies makes sense economically, but the transition could be managed more carefully to avoid such a steep impact on people's daily lives. The discontent is real and valid. That's my initial view on.
All right, now let's talk about it from the standpoint of some stakeholders, Professor, talking about NASIMA. That's the Nigerian Association of Chambers of Commerce, Industry, Mines and Agriculture. They're one of the few stakeholders who've, recently spoken about it. In fact, just about a day or two after we saw what happened with the hikes and all of that. So they're concerned particularly about the impact on small and medium scale enterprises, especially when it comes to the survival of said enterprises. And let's not even talk about the thriving of it or the growing of it, just the survival alone. We've seen a lot of businesses go down under in recent months, and in recent years, especially in the last year and a half. And then, they're also concerned about what this would mean for employment, not just the survival of the business. Employment. We have quite the alarming rate, as it were, right now. Where does this take us? What are the implications, especially for SMEs?
Their concerns are real. And it also shows that we need to do just more than correcting for macroeconomic distortions in the economy. Because at the root cause of this fuel crisis is the attempt by government to eliminate fuel subsidy. I have often argued in several fora that did we actually enjoy fuel subsidy, or is it an attempt at speculative attack on our domestic economy by those who have access first to foreign exchange through import licenses to import petrol, and secondly, to those in the financial markets that seek to make gains from trading and speculating in the domestic foreign exchange market. These are the key issues, actually. And coming back to the impact on the hue and cry of the business community, their concern is valid. If you are to attempt to address the issue from their perspective, what we should be looking at is how do we eliminate this rent-seeking behavior in the foreign exchange market that has led us to this quagmire. That's the first place to be. And the second place to be is that, look, the other private sector, except from the petroleum industry sector, they could have been doing well. But if indeed we have an industrial or manufacturing base that is dependent on foreign input, that is the foreign resource content of the domestic economic activity is very high. What I mean by that is that if you look at every investment, either in industry, in consuming, anywhere in Nigeria, you find that we do not own and control the technology. Multinationals come here to site the branches of their companies in our country. And when they come, they bring in foreign exchange. I have often told people that the issue is not that we lack foreign exchange or foreign exchange is not coming in. The real issue is a structural problem in the sense that when they come, they probably will invest in our stock market when they are bringing in the foreign currency, and they are paid at they convert it at the ruling rate, Naira rate. They convert it at the ruling rate, Naira rate, at that time to Naira. For instance, if you are bringing in $1 million to the capital market, of course, when you get listed, the dollar is not a foreign currency. You are bound, if you bring it in at the rate of, let's even say 200 naira to a dollar, you end up being given 200 million naira. Okay, let's say you even transact and did business and you are profitable. If you make so much profit and your turnover in 1 year is about 400 million naira, you've done well. But this doing well can be significantly eroded if you suddenly find that the monetary authority had devalued the currency, which means although when you brought in your $1 million, it was at 200 million naira. When you now make profit, even 400, and you want to repatriate your profit, or you recapitalize to reindex it in foreign currency and the rest of it, and exchange rate is now saying 800 naira to a dollar. That means that even your 400 naira turnover, million turnover, is now $500,000. You've lost. And that's why most of the industries, foreign direct investors and the rest of it, and foreign companies that they brought in equity in foreign currency, they are moving out. They are moving out because it becomes and I often say, coming back to the question you asked, I ask our local industries and the rest of it, can't we see it? We see it. It is the government policy that is penalizing the economy as a whole. In other climes, what do you do? In the first instance, for you to have domestic competitive advantage in producing those products, you have to significantly reduce the foreign resource content of your production. Then secondly, you have to fight consistently to shield your domestic market, especially the domestic market, from foreign influences. What that means is that you cannot index the prices in Nigeria to variations in dollar. I laugh sometimes. You go to the market yesterday, Gary market seller will say he's selling you a cup at 100 naira. The following day you go there, you ask him, please, I come with 100 naira to buy a cup of Gary. He says, the price of Gary has gone up. When you ask, he says, did you not hear that dollar has gone up? So the problem is a much more fundamental problem. Giving concessions, okay, we will subsidize transportation, we will do this. The problem is a macroeconomic problem. There is a macroeconomic problem that we are economically distorted. I laugh sometimes when somebody tells me that my wage, which is about 400,000 naira a month, 400,000 naira a month. How much is it now? It's not even up to 200 naira, $200. Is that correct? It's not correct. So we have a fundamental problem.
We're having some issues
Yeah?
hearing you, Professor. I don't know if you can hear me now, but I wanted to also dig in, pick your brain a little more, where you spoke about, some policy issues that need to be, looked at. You've spoken about the fact that it isn't particularly a forex problem, but I've heard some experts allude our problems right now to the inconsistencies or the instability of forex, as you will, forex inconsistencies, basically. But you say that they're a structural problem. But then again, you've talked about, policy decisions, as you were, or excuse me, policy implications on, what we see going on. And I just wanted to ask you, if you can hear me, Professor, what exactly at this point in time needs to be done, whether from the physical side or if we're talking about it on the monetary side? We saw about a fortnight ago the CBN, in their decision raising MPR by 50 basis points. So the question that followed that particular decision, 2 weeks and counting right now, is has the CBN done well enough to go that route? And if they have, where can they go from here, seeing as we're in this particular quagmire? That's one. Two, physical decisions on the part of the federal government. What do they need to tweak, particularly? I mean, it's one thing to come out and make a broad proclamation or do a broad analysis of what is the problem and what can be done. But specifically, what do they need to touch on? What buttons do they need to push that would stimulate the economy in the near term? We're not talking about 5 years from now. We're not talking about 10 years from now. We're talking about immediately, considering where Nigerians are and how much of a pinch they're feeling from what's going on at present. Professor, did you get that? I hear you. Please go on.
Hello? Can you hear me?
I can hear you, Professor. Please go on.
Okay. All right. With regard to the first, a lot of things, with regard to CBN, I'm sorry to say, we have my colleagues there and friends there, and they are approaching the problem from a very, very wrong perspective. Well, I say this with due respect to my colleagues and those who are at the helm of affairs there. In an economy where you have stagflation. Stagflation is a situation where there is recession unemployment and the rest of it, and coupled with inflation. Therefore, you cannot use a monetary policy tool to say, oh, you are going to control the inflation. The second point, the second problem I have with CBN rule is that when there are economic crises and you want to resolve it, most economies all over the world, the first thing you do is to lower interest rates. The essence of lowering interest rate is for the purpose of stimulating economic activity so that the private sector, the individuals can literally walk into a bank and borrow. If you don't borrow, there cannot be growth in the economy. Now, I'm linking it to the monetary policy rate, interest rates that they have been raising persistently. The monetary policy, if you increase monetary policy rate, what you simply have done is that you mop up liquidity from the system. Mopping up liquidity, because as an individual, even as a bank, if you have cash surpluses, you have a choice, either to invest or to save. And if the return on saving is better than what you are likely going to get from investment, what do? You save. If the savings were in the commercial bank system, it is productive. But if that saving is as a result of monetary policy rule, which actually sweeps the liquidity from both the private sector, the banking sector, to the central bank, it becomes a sterilized liquidity. In fact, we are in an era of serious liquidity squeeze as we are now, because nobody really has the money. And the example of the one for the example of the 200 million naira investment that I talked about initially. If you have 200 million naira now, all you simply need to do is buy treasury bills. The money goes straight to the central bank, and you make a profit of 26 million. So why would you bother to invest? Because what type of investment, magical investment, are you going to make that with that money that will even earn you 10%? So that is on the part of the central bank. The policy approach is wrong. It's totally wrong. You cannot be mopping up liquidity from the system. You cannot make return on financial assets more important than return on real domestic investments. So nobody will invest. And in fact, that has heightened the speculative attack in the economy, because even small people, we even added to it payment system. You discover that somebody operating a POS, all this local money, this thing, is richer than you, who keeps money there. Because from your own money, you want to withdraw it, it will charge you 200 on 500 naira or 5,000 naira, almost 1,000 on 20,000 naira. You ask yourself, what has this man sold to you that is charging you that kind of money? So you can see the distortion. In fact, central bank is at the heart of all these problems. They are there. Coming back to the second point, the fiscal authority. The fiscal authority kept quiet because each time currency devalues and the rest of it, what that means is that the federal government is actually benefiting, because when they go for revenue sharing, hello?
Yes, Professor, we're here. We can hear you.
When they go for revenue sharing, they don't have enough money from internally generated revenue. So this 3 billion, you people here, they are touting every day. What they collectively do is they say, okay, since we have reserve, let us monetize part of our reserve. So Monetizing that part of reserve means that central bank will now say, this 3 billion, we are going to convert it to naira. If you convert at the ruling exchange rate, there's plenty of money. That's why when the new regime came up and said they removed subsidy, and suddenly we started seeing that foreign exchange gains, they were reporting 3 billion, 3 trillion. People didn't understand the economics of it. And that's why when you hear exchange rate is devaluing, and government has plenty of money, unbudgeted for money, because perhaps before the sharp devaluation, when they drew up the budget, if they drew up a budget of, let's say, based on that 3 billion monetization, and the monetization was at 400 naira, it comes to 12 billion. At the period of implementation of the budget, and since the 12 billion budget was drawn and made in naira, of course, we would have balanced the budget against revenue and expenses. You balance it. But
okay,
at the time of realization,
because of time, apologies for cutting your thoughts short, but because of time, we have to move on. Mr. Owe, are you there? Fantastic. Great to know that you're still there. Apologies for the initial sound glitches earlier. Let's move on. Now, Professor has said a number of things, has given us his thoughts as an expert in the field, and some other experts too have referred to what both the federal government is doing, the NNPCL, and everybody else in that mix right there as market fundamentalism. Just throwing caution to the wind and hoping that the market would do its thing, as it were. But that's by the way. As far as price increases are concerned, there's still a fear that we might see more. But then the National Assembly, through the senators, being led, by the way, by the Senate President, has assured Nigerians that they would not be seeing that anytime soon. But also, Professor said a few things, also alluding to monies realized from some of these decisions taken by the federal government, including the removal or the phased removal of subsidy. The question here now is, given that particular decision taken and the monies recovered from them, there is as yet a trickle-down effect on Nigerians. What do you make of this?
Well, I'm not too sure about the because 25 years ago, we are getting fuel for 20 naira, and they said there was some subsidy, maybe 40% or whatever, and now we are buying fuel for 1,000 naira, 30 naira, 1,030 naira in Abuja. So this whole thing about the regulation is fraudulent. This whole thing about subsidy, it's a mirage. If we are buying fuel at now we buy at 1,000, and you say we are still paying subsidy. We are still being subsidized. It doesn't make sense in any way. So I think the basic thing is for governance to resume in Nigeria. Governance has been on holiday. Governance is not about getting money and allocating monthly. It's about ensuring that the people have some, food to eat. Children can go to school. Those are the basic things. Not all these palliatives. A palliative is like applying, some, something on the patient and it wear off easily. So the issue there is that this government must start working. The primary problem we have in Nigeria is that the government does not think for Nigerians, does not think as Nigerians. The primary problem we have in Nigeria is that the World Bank and IMF have their own, parameters and their own interests, and that's what they impose, and then we follow. The government implements. Honestly, I was asking, what is the issue about refining petroleum products? What is the issue? Cote d'Ivoire has no fuel. Crude oil. It's refining. Anybody can refine. What is the issue? So you have two, issues now. You have the cost Look, let me give you a story. I was part of a government, a delegation that met President Jonathan on December 2011. They had decided to increase fuel price. And they said it was going to be 145 naira. I said, oh, fantastic. And then they gave us all those statistics. Of course, there were a lot of them were even false by Wheeler. And then we have a simple question from the minister, Wheeler. If the landing cost is 145 naira, what will be the cost of refining at the gates of LNA Petroleum Refinery? How much? I said, no, the government has not thought like that. They don't know. Are you serious? But we have done that. There be a professor, from UI, who used to be a professor in UI, of petroleum engineering, Israeli, who had done a cost analysis. And he came to the conclusion with statistics that the cost of fuel at that time will be 40 naira. And the government was talking about landing cost at 145 naira. So that's why I say this old Dangote thing is a story. If now you refine fuel in Lagos, so there is no freight, there is no insurance, there is no demurrage, there are no mother ships or daughter ships. What is the issue? Why would we buy fuel at 1,000 naira? Why? Then the second thing is that because you do not have control over your foreign exchange, it doesn't make sense for you to be importing. And that is part of the problem we've had. In summary, Nigerians are interested in having something to eat. All these long stories about, it was Buhari that removed subsidy and the subsidy, and they're all long stories. Nigerians are hungry. We need results. People must eat. People must go to school. People must pay transportation. If you produce agricultural products on your farm and the cost of transporting it to the market is higher, then you're going to have the kind of inflation you're having. That's the simple thing. It's as simple as that. If you have a right, constitutional right to movement, and the price is so much that you cannot pay for transportation, they are deprived of that right. What we want as Nigerians are results. Not all those long stories, central bank removing this and they are all long stories. And let me say that for millennia, governance is not a rocket science. It is very simple, it's very basic. And so if the present government were to abandon the World Bank and IMF and let us, you have a professor with you who has told you some of the things wrong with the central bank system. These are obvious things. What stops us as Nigerians from discussing and deciding what we're going to do? And beyond all this, as we know, is a lot of corruption in the system. You talked about the National Assembly now. The National Assembly has been on holidays. Who will not be on holidays if you have 21 million naira to spend every month? So they are not in a position, the National Assembly is not in a position to call the government to order in any way, the executive. The National Assembly is not in a position in any way to call the NNPC to order. You've had an NNPC that cannot refine petroleum products for 30-something years, and nothing is done about it. Every year, the man there tells us, oh, by the end of the year, September, December, the refineries will start in Port Harcourt, and then Warri, and then Port Harcourt again, and then Kaduna. And then the year comes to an end, and it gives us another year, every year, and nothing is done to him and his team. They are sitting down there, claiming to be running the country.
All right. Mr. Lakemfa, I know that you were very passionate about this, as are very many other Nigerians, but apologize because of time. We're going to have to pause your thoughts there and start to round up. But to add to what you've just said about the National Assembly not being in a position to carry out their constitutional duty, that is not particularly in order, because that's exactly what they're supposed to do. They're supposed to ensure checks and balances, especially where these issues are concerned Nigeria, the welfare or well-being of Nigerians is concerned. If the Minister of State, if the Minister for Petroleum Resources, talking about Mr. President, hasn't spoken, it's because those at that particular level, talking about the National Assembly, aren't doing what they're supposed to do, because that's exactly what they're supposed to do. And of course, doing the same thing to the bosses of the NNPC, or the leadership, if you like, of the NNPCL, and every other, stakeholder that is involved. It is the onus, or the onus, as it were, lies on the National Assembly to ensure that there are adequate checks and balances. But away from that, Professor, let's round up on this note. Mr. Aliko Dangote has approached the government of Grenada, talking about the Prime Minister, to be exact. They had a meeting yesterday for trade relationships, where we're going to buy crude from them, and we're going to sell products in return. How does this, work for us? What are your thoughts on the prospects of this? Let's round up in a few words, Professor.
It's very disappointing to note that we cannot even meet the basic needs of a so-called domestic refinery. And I am sure that he wants to use it as a ploy to key in to calculating the consumption price of petrol, refined product, in foreign currency. We should shy away from it. He had already appealed to the government that he wants to be buying crude in local currency. There's nothing wrong with that. There's nothing wrong with that. In fact, and the naira for crude deal should be should be cemented well. I mean, we should key onto it. Not only key onto it in such a way that the second part is that it should not only be the only beneficiary. I note that when I was in Central Bank and we did a special study on this oil sector, in fact, our the crude, the cost of producing crude locally, it's $12, and it's still so today, compared to about $6 by Saudi Arabia and the rest of it. Now, if the real cost, if the domestic cost is $12, what stops us from selling to local refineries at highly subsidized rate? People will say, okay, after refining export, look, we will sell local currency to domestic refinery. We will also grant export rights to those refineries. And I know that in the international market, the petroleum products is priced in international dollar. So that's what we do. And if we want to forestall abuse, go and cite several filling stations at the border. And when you are coming there, you buy it. If you are from Republic of Benin, when you get it, please pay us in dollar. And you put paid to rest all this. So we also need to eliminate unnecessary costs.
All right.
Okay. Transparent pricing.
Thank you very much, Professor. Apologies,
support.
I wish we could have some more thoughts from both you and Mr. Lakemfa, but we are racing against time. So hopefully we're going to get you both back on another episode for perhaps similar conversations or more. But again, thank you very much for that. We have been speaking with Professor Bamidele, who is a professor of economics at the University of Lagos. He's also a development, monetary and international economics expert, Professor Emmanuel Dele Balogun. Thank you very much for joining us. And also Mr. Lakemfa, who is a human rights activist, journalist and author, and also a former Secretary General of African Workers. Many thanks for joining us. A lot's been said between the two gentlemen today on the program, including citing structural issues, sundry policy decisions across the board, whether it's, the central authority or the monetary authority, as it were. Of course, one of the recommendations was to reduce foreign resource content, domesticating that as well. Of course, abandoning IMF recommendations, World Bank recommendations, which between both of them seem to have been at the center of some of our struggles, as you were, amongst many other issues that were raised. Well, the corollary of that between both gentlemen is that governance is not rocket science. But what we can hope for from here on out is that Nigerians, in the soonest term possible, would breathe or heave a sigh of relief and breathe, as we say in local parlance, let the poor breathe. Well, that's Market Insight this morning. Let's take a quick look at what has happened so far on the FX market. Monday, we saw the Naira dollar exchange at 1,672 Naira. Tuesday, 1,646 Naira. Wednesday, 1,647 Naira. And yesterday, being Thursday, it was at 1,657 Naira. And then today, it's going for the lowest in the entire week at 1,613 Naira. That is all, by the way, on the official market. Many thanks for joining us on today's edition of Market Insight. Of course, it comes your way every other weekday at 11 a.m. Do join us for Monday's Week Starter edition. Let's enjoy the rest of the weekend. Join us at the top of the hour for the news update. I am David Chiedu. Have a pleasant weekend.